Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 17th of April, 2024, the time 7:05 p.m. Central Time. Stock market stable, but it lost a lot of ground today. The threat of higher interest rates for longer is finally grabbed hold. And there's an interesting event that I tried to point out to people. My subscribers have heard me say this, and I'm pointing it out. We were looking so hard to get a 3 to 5% break and hoping that we could to be a buyer, and no buyers are showing up in the mass that they did prior to 2 weeks ago. Every break prior to that, you get down 1.5%, 2%, and the buyers showed up, and at the end of the day, you were zipping higher. The market has changed its character, and it's changed its character because it's coming to the reality that what the market is likely doing is putting back interest rate cuts indefinitely. All right. Now, when I say indefinitely, I don't think they're June. They might be July. I don't think so. September is the first possibility because I think that you're going to need 3 months in a row of lower CPI and, according numbers, PPI and PCE, to have the Fed finally say, we're trending. The 3 months up that we just had are trending the other way. And the Fed chair yesterday, in his interview, if you were watching it, he was on with the head of the Bank of Canada, and it was very clear. All right, they're not getting what they want. And in order to get it, one report won't do it. I predict 2 reports won't do it. The third one can get them to act because that is what a trend is typically made up of. Just listen to Jeremy Siegel and other guys that are quite bright. You'll hear the number 3 thrown around an awful lot. So it's weighing a little bit on the gold market and the silver market. The dollar is stabilized, but where's it going? Well, I still think the euro's going a lot lower. I did a special report on that, and the timing of when to come in is going to be the issue. You can see the energy markets have sold off because of the old buy the rumor, sell the fact. We were living under the Iran threat for a week. Buy the rumor, and it kept going higher. You had the attack Saturday, and oil has done what? We'll take a look at it in a minute. And it's very hard for me to get bullish on bonds or notes until I see the Fed wobble. Other than that, you're staying higher with rates, and how high, I don't know. But if reports come in stronger for the month of April than people are predicting, you're going down even more in the futures markets, which means higher rates there. Let's see if I can get this to work for us. I'm having a little problem. I think it's the battery. Okay, so here we are in the E-mini weekly S&P 500. I told you that I thought maybe we can get a breakdown to the 18-day average. We seem to be headed in the right area there. I'm not going to be able to do this. If I have to do that every time, I will. You can see how the market has got a vertical price decline. When we look at the market, the pattern is a higher high and a lower low. It's not really done a lot there. On the market, you fought your battle at the 18-day average. People didn't think you could go down. And one of the numbers I told you is if the lower Bollinger Band didn't stop the market, you might be going to the 100-day average. And what the market did instead is it gave you the Gorilla Glue trade. Now, Gorilla Glue trade, I use that term because it's when the black line, the Bollinger Band, hits the number and doesn't get away from it. And what it does is it takes that and it starts forming the embedded slow stochastic reading. And one of 2 things. It depends how far along that happens. If it's late in the move, and I think it's going to be late in the move, I think it's going to be near the 5,000 level, you can get an embedded reading, and if the red line flips back over 21, it exhausted itself on the decline. But right now, on good hard rallies, if it embeds, the market likely to be sold. When I look at the mini NASDAQ, you have a higher high, lower low, and today you hit the 100-day average and the Bollinger Band. Again, you're latching on to that number. You're nowhere near embedding. This is not as weak as it could be in the S&P. In the Dow, you've been under now the 100-day average for a bit. This is where I thought the market would try to hold. It didn't. This tells me that the 100-day average is going to be the resistance on the way up. At least that's what I'd expect. You have the embedded reading. If you've taken my course, the Enhanced Bollinger Band course, this ties in with it. You know what I'll be looking to do. In the mini Russell, well, the 100-day didn't hold here. I think the 200 will be the number. We haven't hit this in a very, very long period of time. So the logic tells me that is the zone to be looking at. Then we get to the 10-year note. You have your bearish embedded reading. I think rallies are still going to be sold by the pros. I'll think they'll short cover if the red line, which is trading at 17.29, closes over 21. Barring that, I think they sell rallies as they come. Same in the 5-year note as well. Then I look at the dollar index, and I think this pullback, because you have that embedded reading, is a buy. Lose the red number underneath 79, I'll change my mind. Until that happens, I view these pullbacks as the buying opportunity still, and I think the pros will, looking for the market to challenge the upper Bollinger Band again. In the euro, you know I've just done my eurocurrency report. So let me stop here and remind you of what we did there for you. Because in this report, I cover for you in great detail the seasonal charts, the price count charts. I look at the weekly and the daily charts. We try to give you timing as to where the market's at. I discuss the fundamentals, put it all together, and try to give you how I think you do this, all right? And what I'm looking for could be a parity trade with the dollar. I mean, if the race really takes off, the Euro Bank is going to go and do what? They're going to start cutting rates, I think, well before the United States. And that sets everything off because we'll still be arguing, should we cut, shouldn't we cut? The high interest rate keeps us initially good. They come down. And when we start cutting, it all reverses. But it takes time for that to happen. So you want to take a look at what I'm saying. Maybe I'm wrong, but I'll give you my opinion in it. You go to iraepstein.com. Under research, you can move your cursor to the top anytime here. That'll take you right there as well, okay? The next one is the British pound. So yeah, there was a little bit of a stall, but I don't think you want to get excited on the long side of the pound. The economy is weakening. Okay, the service inflation didn't fall enough. So what? It's sticky here, there, it's sticky here. We know it's sticky. I think they're going to keep looking, and with a political year coming up, a lot of pressure on the Bank of England to act sooner rather than later. Bitcoin has come unglued, and that is the right term. You were just up in the 72,000 range. You've just fallen $12,000. You know, when you trade Bitcoin, you have to have a stomach with Pepto-Bismol that you walk around with all day because the swings are so big. It's certainly, I'll be very honest, I don't have the stomach for it. I know traders that do, and they love it. My next door neighbor, all the time. I mean, if I walk outside, he grabs me. And he buys a lot of them and sells a lot of them. But I just crack up with it because I don't know how you do this, all right? When we look at Brent versus June oil, you're acting good. You know, it hasn't given up. The bias is up. I think that there's more value temporarily to danger that can happen on the Brent than our WTI. And as you take a look at both, if you look at the Brent, you're in a downtrend. You're not oversold yet. This market can still work lower. You could be at $85 here, and you can go back to the 80 level here. Doesn't have to. American oil, the WTI, is already oversold. You have a 26 reading. I view in slow stochastics, any number under 30 is oversold. And to me, that's one of the filters. It says, I'll let somebody else play the game on the short side. In gasoline, again, the market failed at the upper Bollinger Bands. Once again, I remember how it failed here, and it caught me in that. Now it's just caught others. I still think it's a little early to be buying for the spring-summer drive. And last in that gas, I think you did just what you had to. You saw the short covering at the lower Bollinger Bands. You're oversold. Yes, it can go lower. Yes, there's going to be more of it, but there's a lot of demand for it too. And we're at that funny time of year where you don't need heat, you don't need air conditioning in large parts of America, and you're not going to burn that energy just yet. It's coming though, so get ready for it. So you put it all together, you get a game plan for yourself, and that's where we try to fit in. So one of the parts of it, go take a look at that report on the eurocurrency. You can go up here. It goes off our website on Friday. My reports only stay up 3 business days after I put them out. So sometime on Friday, it disappears. I know the time. I won't share it with you. You have yourself a great evening. I'll catch up with everybody tomorrow morning. Take care.